Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. The title of the video is how to invest in the forex market like the banks. How to invest in the forex market like the banks. Today is the 27th of September 2014, and the time in London is 15:30 p.m. in New York at 10:30 a.m. Let's get started. The topics that we're going to discuss in the video are market patterns, economic data, currency correlation, long-term investment plan, banks activity, and foreign exchange. All right? The first thing first, traders that are following us, please bear with me as I'm explaining to new traders what is a market pattern. There are three market patterns. All right? The horizontal market pattern, when the price is oscillating between two levels. All right? There is also another market pattern that we call the rising channel or the rising market, when the market is in a rising channel. All right? And also we have what we call the declining market pattern, when the price is in a declining channel. One can use, the market pattern on the monthly chart to determine, the market sentiment. When the price is in a rising channel, the market sentiment, theoretically speaking, theoretically speaking, is considered as bullish until the price reaches the resistance zone or until the fundamentals are becoming weak, all right? On the other hand, if the price is in a declining channel, theoretically speaking, the market sentiment is considered bearish until the fundamentals start improving or until the price reaches a target zone. Sometimes the price does not go up or go down. The price will be stuck in between two levels, the rising channel and the declining channel. It is very important for traders to pay attention to the market pattern on the monthly chart to determine the market sentiment for the year, all right? This is about the market pattern. In order to use the market pattern, accurately, or to make excellent trading or investment decision using market pattern, one must always pay attention to the economic data. So we cannot, implement a trading or investment decision without combining the market pattern and the economic data. Let me explain myself to you. Suppose the price is in a rising channel and the economic data is bearish. We cannot buy it. Or if we are buying, we must be very careful. Though technically speaking, the market sentiment is bullish because the price is in a rising channel, but because the market data is becoming weak, is becoming bearish, we need to be very, very cautious. On the other hand, if the market sentiment is bearish, which means the price in a declining channel, but the fundamentals start improving, we need to be, very cautious if we are selling or if we are bearish. So the best approach is to combine the market pattern and economic data in order to make excellent investment decisions in the forex market like the banks. The next thing I want you to understand how one can invest in the forex market like the bank, we must also understand the correlation between currency pair. Some currency pair will go up together, some currency pair will diverge, which means when one currency pair is going up, another currency pair will be going down. These type of currency pair are negatively correlated, but currency pairs that are going up together are positively correlated. So you want to understand what are the currency pairs that are positively correlated and what are the currency pairs that are negatively correlated. One example of currency pairs that are negatively correlated are the Euro USD, okay, and the dollar Swiss franc. So when the Euro USD is going up, the dollar Swiss franc is going up. When the Euro USD is going up, the dollar Swiss franc will go down. And when the Euro USD is going down, the dollar Swiss franc will go up. They are diverging because these are negatively correlated currency pair. This is the theory. It's not always the case. As I explained to you in the previous video that we call, okay, how to trade forex under pressure, we were talking about the market sentiment relating to the leading currency pair, which is the Euro USD. Right now, the market sentiment towards the Euro USD is bearish because of the policy that are designed by the European Central Bank, which we call ECB. All right. So for traders that do not want to sell, some traders they love to buy. So at this point in time, the market is giving priority to sell signal for the Euro USD. So if you don't want to sell, you will go and buy the dollar Swiss franc currency pair, USD CHF. All right. Now, what is happening in this market? The next topic that we're going to discuss is the bank activity in the market. How the banks trade, okay, currencies. How the banks intervene in the forex market. You want to know? Apart from the trading activity taking place in the forex market, there is also investment decision. There are investment decisions that are made also in the forex market by the banks. Now, in this video, I want to share with you few tips and tricks about how the banks, okay, invest in the forex market, how they make their decision. What is the foreign exchange? The foreign exchange is just the market that allow market participants to transact in a currency, in different type of currency, like the pound, the British pound, the US dollar, the New Zealand dollar, the Australian dollar. This is, okay, the foreign exchange. But when we are talking about foreign exchange, we are talking about real money. So for traders that go on holiday, for instance, if I want to come to United States, all right, I can convert the British pound into US dollar, all right? Or if I want to visit New Zealand, the beautiful New Zealand, to eat some lambs, a land where they spend, people eat a lot of lambs, okay? If I want to go to New Zealand, I'll have to convert the British pound into the New Zealand dollar, all right? If I want to go to the sunny Australia, I may have to convert the British pound into, okay, the Australian dollar. I may not have to do it directly. I can go with my debit card, okay? I do not use credit card. I can use my debit card, go directly to the country that I want to visit, and every transaction, the bank will automatically convert my money, which is in the British pound, into the local currency where I'm visiting, all right? So you want to understand the foreign exchange. Something is happening in this market, and I want you to understand it. The banks will buy currencies, okay, and resell them. So at the best time and the best place, when the fundamentals are improving, all right, the banks will decide to buy the coin. They'll keep buying, they will keep buying, they will keep buying it. They are buying it at a certain price. There are areas, target price, where the bank will be busy to buy a currency pair or where the banks will be busy selling a currency pair. But it's all about buying and selling real money. They are buying it at a specific foreign exchange rate, okay? All right, they will use a specific exchange rate to buy, okay, a currency, and they will resell it to the public. So, for instance, if the euro is going down, like the euro is going down now, all right, where and when the bank will buy the euro, okay, at the best price, okay, at the best time, and later on sell the euro at a higher rate, a higher exchange rate to the general public, all right, because they make money by exchanging, okay, a currency to the public, all right. So I have here the market pattern for the Euro USD. If you look carefully, it's a balanced market pattern, because if I draw a line here just like this, you can see that the Euro is oscillating between these two levels. It's not going anywhere. It's just, see, it went down, it went up, it went down, it went up, it went down, it went up. Okay, though it's not. You can see that it's not horizontal resistance. It's a bearish trend line which I draw here. All right. The banks will decide to buy or sell the euro at these conversion point, all right? Because the market pattern for the euro USD right now is horizontal market pattern or a balanced market pattern, the market decided to sell the euro. You see, there was she went up here, went down. See this resistance, that's where the euro they start selling now. So where is the ultimate target where the bank will start investing in the euro? This zone here. You can see that, okay, they bought it here. The exchange rate between the euro and the dollar at this point in time was okay, 1 euro for $1.23. All right, 1 euro for $1.23. All right, this is the zone where they are buying the euro. So anytime the euro hit the level of $1.23, the banks are busy, okay, accumulating, okay, the euro. But you can see that along this red trend line, okay, the banks are busy selling the euro as soon as it hit this point. So how one can invest in the forex market like the banks? Well, you can do exactly the same thing. Suppose you have, okay, 100,000 US dollar, okay, because we are talking about the euro USD, you have 100,000 US dollar. If the euro hit the zone of $1.23, all right, what do you need to do to invest like the bank? What do you need to do? You need to convert your 100,000 US dollar into euro. Why? Because you know that there is a high chance, talking about long-term investment plan, which is another topic that we are discussing in the video, you are not trading, you are investing in the forex market. You are buying and hold, or you are selling and hold. All right? So you will convert, because you know that the euro USD, this is a point where the bank will be happy to buy, to start accumulating the euro. You will also quickly, if you have 100,000 US dollar, at this point in time, when the euro hit the level of $1.23, you will convert all your, okay, your US dollar into a euro, because you know that soon the euro USD will start going up and you want to be in the euro. The bank will start buying the euro and they will start selling, okay, the dollar. Here you can see that the banks were selling, okay, the euro, okay, they were selling the euro and were buying the dollar. Here they were buying the euro and they were selling the dollar. Here the bank was selling, okay, the euro and were buying the dollar, okay, and here the bank were buying the euro and were selling the dollar. Here the bank were selling the euro and here they were buying the euro. All right, so as they are selling the euro here at a critical exchange rate, all right, with this zone here of, let's say, the zone of $1.48, as soon as the euro hit the level of $1.48, they are busy selling, okay? They are busy selling it. They are selling the euro and they are buying the dollar. So they are busy buying the euro, they are busy buying the dollar at this point in time, because they know that it's a very excellent exchange rate. They will buy it and they will resell the dollar, because they are buying the dollar here. As soon as the euro hit this point, they will start selling the dollar to the public. All right? So they buy the dollar here at the best price. The value, the money that they bought, they will make a lot of profit because the euro is going down and the dollar is increasing. So they buy the dollar at the best price. And at this point in time, they will start selling, distributing the dollar to the public. Here again, as you can see, the banks were selling the euro and were buying the dollar. All right. As soon as the euro USD hit the level of $1.23, all right, they will start selling the dollar to the public because they bought it here at the best price, and now they will, okay, sell it to the public at a better price. So you also, ordinary traders, can also, if you have $100,000 or even $10,000, you can play with it, or you have 10,000 euro, okay? You want to know where is the best time to start buying the euro and when is the best place, okay, to sell the euro. Where is the best place to sell the dollar? Where is the best place to buy the dollar? You have to understand that this is about investment. When I'm talking about selling, okay, the dollar, okay, it means that you have bought the dollar at a better price and it has increased in value. You have converted your euro into the dollar at this point in time, right here. But as you see that the euro is about to go, now you will convert again, okay, all right, your dollar into the euro. And again, your value, the value of your money, keep increasing. Are you with me? Let's check how long we have been talking about this. This strategy is for long-term investors, which means you have, okay, a lot of saving, you have a lot of money, you have a lump sum of money, and you want to play in a currency market like the bank. You want to invest in the forex market like the bank. This is not about trading, this is about investment. This video is suitable for traders, but also more suitable for investors, especially the long-term investors in the forex market. So if you have, for instance, $100,000, all right, $100,000, okay, and the euro hit this level here, all right, suppose you have 100,000 at this point in time. You have 100,000 euro because the euro is going to go down. You have 100. The currency that is going to go down, you need to convert it before, because if you have 100,000 euro and the euro start going down, the value of your 100,000 euro is going down. The purchasing power of your 100,000 euro is going down. You understand it? So you have 100,000 euro in your bank, but the value of the euro is going down. The purchasing power of your 100,000 euro is no more the same. So that's why I say to traders, it's all about money flow. The money management, the money managers or the wealth managers are doing this activity in the markets, and the bank are doing exactly the same thing. So because the bank, you put your money into the bank, okay, the bank is using your money, okay, to invest in the forex market, to invest, okay, in the stock market, to invest in the commodity, and they want to earn interest on it and give you maybe 1% interest rate or 2% interest rate or 4% interest rate. But behind the scene, the bank is making millions of profit with your deposit, all right? And you also can do exactly the same thing if you have a big lump sum of money in the bank. So if you have 100,000, okay, euro at this point in time in the bank, all right, you will check with the bank what is the exchange rate. So you want to buy it at the rate of, okay, $1.49. So you will quickly say, I want to convert. So you call your bank, you say, okay, I want to convert my euro, because you are Europeans, you have a bank account that is in euro. You will convert your 100 euro here, right here, at this point in time. You will convert it into dollar, and you just wait. You just wait. And as the euro is going down, because you knew that the euro is going to go down, that's why you are converting it quickly into the dollar. Why are you converting into the dollar? Because you knew that, okay, the dollar is about to go up. Here again, because you know that the euro is about to go up, if you have $100,000 at this point in time, you will convert your $100,000 into the euro, because you know that the euro is about to go up. And as you know that the euro is about to go down, you will convert your euro into the dollar. And you keep doing exactly the same thing, and you will see that the value of your investment will increase over time. But you want to be ready to take profit at the best place, and using, okay, the market pattern, the economy data, okay, the currency correlation, and designing a long-term plan, one will be able to make excellent decisions like the bank. This is about how to invest okay, in the forex market like the bank. I hope you have learned something from this video also, and we put it to use to make excellent decisions.